Good evening and welcome to our session today. Right, in our previous class, we introduced like our PPE. I described what PPE is, and we talked about how to account for PPE, how we determine the cost of PPE, how we determine depreciation. Then I asked you to read on things like useful life, revaluation method, and stuff like that. So today, I just want to combine some of the principles that we did so that we can be able to answer questions. So please want to use what we did so that we can be able to try to answer questions that I sent to you earlier today. Right, I sent you two questions. Right, on the first one, I will be as slow as possible. Then the second one will try to be faster. So the first one, since I said I will be as slow as possible, we might not even finish it. But when I do the next one for next week, we should make sure that we are faster because we now know what to do. Right. So please, but even when I say we are faster, don't let me be too fast. Otherwise, we'll lose the whole thing. Because for this module, this is one of the most important modules. You'd find that even most of the other topics, they will be very much related to this. When we do impairment, if you don't understand how to account for PPE, there's no way that you can do impairment. When we look at the effects of transactions in foreign currency, most of them will also be related to PPE. So it is very important that we try to make sure that we understand whatever we shall do in terms of this PPE. So please feel free whenever I'm a little bit faster, slow me down so that we go step by step so that we can be there together. Right? We don't want you to leave you behind. And remember that most of these things that we are doing here will help you to do assignment one. So it's very important that we understand how we're going to do them. Right. And also, please remind me on the due dates in the group. You can just tell me when will be the due dates of the assignment so that we can be able to guide each other earlier so that we can understand what to do earlier. Right. So we'll start with question one. Uh, there are things that I will just explain which we have not yet done. I think one or two things that I will just explain so that we can be able to complete this question. Right. First of all, when you are reading such a question, you start from the required. Right. Required, it says disclose the following notes to the annual financial statements. We have got property, plant, and equipment, and non-current assets here for sale. My friends, I'm not going to answer this part. I'm not going to answer that part because we have not yet done it for now. So I'm only going to deal with the property, plant, and equipment. And when I come to that part, I will only explain the things that are relevant to property, plant, and equipment. Then number two, I will also, here they say the total is not required. You should always check. Although they say the total is not required, I will take into account the total because we're just practicing. Right. Then this part will just partially do it. For instance, that I will tell you. C will not do it at all for now. We'll do it at a later stage. And D, I will do it, but we'll also do it partially. We will not do it in detail because some of the things I have not yet done with them. Right. So I would start. Before you read your passage here, in fact, we can read this first one. The Pump Limited is a company involved in manufacturing of different types of water pumps in South Africa. The company is a 31 March year end. So I want you to understand that, okay, we'll do calculations first. Is that right? Right. When you receive this document, you go to the second sheet. That's where you will see this question. All right. First of all, I will start with explanations and calculations. Right. We should know your financial year before you even start your things. Why? Your financial year, you will use it, for example, to determine a depreciation, on which date you are determining depreciation. And it will be very important to count your months, especially for assets that were bought or sold during the year. So it is very important that you know your year end, because there will be some assets that will be depreciated for periods which are less than a year. For you to count those months, you need to know what is my year start and what is my year end. And here they've told us that our financial year is ending on 31 March year end, but we should know the exact year. We know that we are preparing for 31 March 2019. So we can safely say this is our financial year is 1 April 2018 up to 31 March 2019. That's the year that ends in 2019. So this is a very important thing that we have to do. Right. After reading that, you have to go and read your policies. You have to go and read your policies. Your accounting policies will state how they are providing depreciation. Are they using the straight line or the diminishing balance method? So that when you do calculations, you already know what policies you should follow. Right now, according to these accounting policies, the following is an extract from the accounting policies of PAMP Limited. Owner-occupied land is accounted for using the revaluation model. Revaluations will be made with sufficient regularity to ensure that the carrying amounts do not differ materially from that which would be determined using fair values at the end of the reporting period. It is the policy of the company to realize and revaluation surplus upon disposal of the underlying asset. Right. When they, like for our module, the only asset that we use at the revaluation model is land. But of course, those who are going to go and do accounting later, they will learn that we can even do it for other assets. Right. So what is the revaluation model? Right. So we're saying revaluation model, and this is being done on land. That means the land is revalued at the end of specified periods. It doesn't have to be every year. Specified period according to policy. In this case, they said what every, it can be every year, it can be every 2 years. At the end of the reporting period. In this case, so yearly. In this case, yearly. Right. So what happens? We call a person who is qualified in the valuing of land. We ask him to revalue our land, to tell us the value of our land at the end of the year. Then he will tell us, he will do his assessments. We don't know how they do it. Then he will give us a certificate that gives us the value of our land. He can come and say that your value of your land is now 500,000. So when we get that value, we will then increase the value of our land in our books to that value or decrease it to that value. Right. If it's an increase, it's part of equity, which is revaluation. If it's a decrease, it depends if there were increases in the previous years. If we had increases in the previous years, then the decrease would be if there were no decreases in the previous years, then the decrease would be treated as an expense. But if there were increases in the previous years, the decrease in our value of our land will be subtracted from the revaluation that we had. Right, maybe to put it into perspective, let's say our land was 500,000 in 2020, 2020. This was 2021 when we bought it. Then in 2022, the person who revalues it says it's now 600,000. The revaluation will be 100,000, which will go to what? Revaluation. Then let's say in 2023, he says the land is now 550, it has gone down. That 50,000 will not be treated as an expense, but it will be treated as a reduction in revaluation. Remember that there was a revaluation of 100 here. From this to that, there was a revaluation of 100. So in our account, we've got a revaluation surplus of 100 by 2020 when we started 2023. So the decrease of 50 from 2022 to 23 will be reduced from that revaluation. But if, for example, if here it was 520, right, you try that the increase, and here let's say it's now it's now 500 and 490, right? You try that here there was an increase of 20, which would be regarded as revaluation, but the decrease is 30, which is more than the previous revaluation, which was recognized of 20. So what would they do? They will only subtract 20 from the revaluation. Then the other 10 will be regarded as an expense. So from the revaluation, we can only deduct what is already there, the revaluation that was already provided for in the previous year. So that's how they deal with the revaluation. Right. So it is the question of a qualified person comes, tells you your revaluation is so much. Then you increase or decrease the value of your asset accordingly. Right. Then you will see when we account for the land.
Yes. Eugene, can I just check with you?
Yes.
You saying revaluation, is it only for land for this module?
Yes.
Not any other asset. Okay.
No, we don't revalue them.
All right.
We rather depreciate them. It's just for this module. I'm not saying for, even in practice, only for this module. Right. Owner-occupied buildings and machinery are accounted for using the cost model. Right. When we use the cost model, it means when we buy the asset, we record it at cost. This one I will not write anything on the notes because we did it in the previous class. So that means the day we buy the asset, we record it at its cost price. Then subsequently, we then record it at cost minus depreciation, accumulated depreciation. So periodically, we'll then be depreciating the asset. That's the cost model. So the cost model is the one that provides for depreciation. Right. Then depreciation on buildings and machinery is written off in accordance with the straight line method over the assets estimated useful life. Right. We now know that the buildings and machinery are being depreciated according to the straight line. That's the reason, one of the main reasons why we come here to the additional information. Right, the fair values of land were determined with reference to current prices of similar land in the same location and condition. This is just to tell us that we can rely on the what fair values determined, as they were based on what? On similar land within the similar location. So they can be relied upon, the fair values. Right, usually this information, if possible, you can put it in the notes down there where you describe how you found the revaluation. Right, when we do the PPE, this information about tax is not important. The tax information will only be required when we determine the income tax expense or when we determine the deferred tax. So for now, the information 3, 4, 5, when we do the PPE note, is not important. Right. Then they said land and the buildings are regarded as separate classes of assets. So for this module, guys, we don't do what we used to do in the other earlier modules in the second or first year, whereby we used to classify land and buildings as one asset category. For this module, land is a separate asset, buildings separate assets. Right. All amounts are material, then ignore the implications of value-added tax. Right. Now, we now know the basic policies. So we can now go to the question and start to do our calculations. When you do a property plan and equipment note, most of your time should be spent on calculations. Actually, even in an exam, because when your calculations are there and they are in order, to do the note does not take you 5 to 10 minutes. So if a question is allocated 50 minutes, you should know that about 40 minutes should be on calculations. But again, you should understand one thing. If you do calculations and you don't do the note, you have not answered the question. Remember, your calculations should be numbered. You should make sure that your calculations are numbered. And those calculations, you should refer to them when you do your note. You should refer to them when you do a note. That this is calculation 1, calculation 2, calculation 3. Every figure that you have on your answer sheet, which was not on the question paper, you should show how you got it. Every figure which is not on the question paper, it should be shown how you obtained it. And normally number your calculations. After numbering them, then you refer to them when you do your final answer. Right. Now let's look at this question, land and buildings. On 1 April 2015, remember we're now in the year ended 2019, so this is about 4 years ago. Pump Limited purchased a property to use for the manufacturing of the water pumps at a cost of 5.2 million, land 1.5, buildings 3.7. On acquisition date, it was determined that the building had an estimated useful life of 25 years and a residual value of 500,000 was allocated to it. On acquisition date, the building was available for use as intended by management as well as brought into use. So this building will be depreciated from acquisition date. Remember from our previous class, we provide for depreciation from the date that the asset is available for use. Right. On 1 May 2017, management purchased a vacant piece of land at a cost of 2 million with the intention to erect an office building for its own administrative purposes on it. The construction of the office building commenced on 1 June 2017 and was completed on 30 June 2018. The following construction costs were incurred period 1 June 2017 to 31 March 2018, 2 million. 1 April 2018 to 30 June 2018, 3 million. Right. Then they said on completion date, it was determined that the building had an estimated useful life of 30 years and a residual value of 800,000 was allocated to it. The building was available for use as intended by management as well as brought into use on completion date. That is on 30 June 2018. So we have two buildings. This one for manufacturing and this one for administration. Right, both buildings are property, plant, and equipment. As long as you are using an asset for your own purposes, it's property, plant, and equipment. This should be distinguished from a property that you are mainly renting out. Property that you are mainly renting out is not property, plant, and equipment. It is investment property. Like let's say a company has got a building in Pretoria Central and they are renting it out for offices and residential purposes. That building is not property, plant, and equipment. It is what? Investment property. So we have to check that when they say do the property, plant, and equipment, is this building property, plant, and equipment? For it to be property, plant, and equipment, it should be mainly used for what? Personal use by the company. So if it's mainly for renting out, then it will be investment property. So in this case, these two buildings are property, plant, and equipment. Why? The first building, they are using it for manufacturing. They are using it themselves. The second building, they are using it for administrative purposes. They are using it themselves. So both buildings are PPE, property, plant, and equipment. Right. On 31 March 2019, an independent sworn appraiser determined the fair values of the land of the respective properties as follows. We have 1.7 and 2.3. That's the revaluation of the land. That is on 31 March 2019. At the end of the current year, remember our year is ending in 2019. The residual values and estimated useful lives of both the buildings remained unchanged throughout the period. No decision has been taken by the company to sell any of the properties. Right, so we'll start with land. So let's say we say our land. Right, there's revaluation of our land. Let's calculate our revaluation, and the revaluation is in the current year, considering that the revaluation happened on 31 March 2019. So let's calculate our revaluation here. Right, we have got the manufacturing property. Right, our manufacturing property, it was acquired at 1.5. And according to the question, the value for manufacturing property is now 1.7. This is the manufacturing property. So it has increased from 1.5 to 1.7. So our revaluation is 1.5. Or maybe let me put it like I want to put it in a way that it will help us when we do the answer. Let me just say our land there. Let me put it this way. Manufacturing property. Right. Then I will have my administrative property. Then total. Right. I want to put it in a way that it will make it easier for you to just export to the PPE. Right. We have our carrying amount at the beginning of here. According to the question, it appears that from the time that they bought their land, it had never been revalued. The land had never been revalued. So you can find that our land was 1.5 for the manufacturing property, and our admin property was 2 million. Right. So we'd say 1.5 and 2 million. These are calculations. We're not yet on the main answer. Then we'll have our revaluation. Surplus. Revaluation surplus is the increase in our value of land and buildings. Right. Our manufacturing property increased from the 1.5 that it was. We're now told that it's now 1.7. So we'd say 1.7 minus 1.5 for the manufacturing property. So we'd say 1.7 minus 1.5. Then for the admin property, we know that it was acquired for 2 million and it's now 2.3 million. It's now 2.3 million. So we'd say right. So to find out the manufacturing property, it was 200,000. The administrative property, it was 300,000. Then the total was 500,000. Right. Then we get our carrying amount at end of year. So these are our calculations of the land. So our land, all in all, it was 3.5 at the beginning. There was a revaluation of 500, and it's now 4 million. Any questions on the land? Let me remove this one. It can be misleading there. Any question? No questions. Then let's do our calculations on the buildings. Right. We also have these two. Right, my friends. I beg you that on this stage now, I want you to follow me because there will be more complicated calculations, which I want you to follow me and stop me in case you don't understand. Right, our cost on 1 April 2018. Why am I stating at 1 April 2018? Right, when you do your PPE, right, when preparing PPE notes, we need the following. Actually, maybe I might try to just do a general layout later. Right, we need the following. We need the carrying amount at the beginning of the year. So, although the other building was bought in 2015, I'm only interested in the carrying amount at the beginning of the year. And what is carrying amount? We know that carrying amount is cost minus accumulated at the beginning of the year. So hence, that's why I need the cost at the beginning of the year and the accumulated depreciation at the beginning of the year, because I need the carrying amount at the beginning of the year. Right, then you also need revaluations during year, if any, of which on the buildings we don't have revaluations. You also need additions during the year. Which is at cost. So this is the cost of assets acquired during the year. Or constructed during the current year. Right, you need the depreciation for the year. All right, you need maybe the impairment loss. Before I will explain it, but we'll do it in broader detail when we do when we do impairment. It's a topic on its own. I'll do it in broader detail at a later stage, but today I'll just explain a small thing that might apply to our question. Right, you might need also transfers, other categories. E.g., PPE, property, becomes investment property. The company decides to rent it out. You can have your building which you are using, then you decide to rent it out. You have to remove it from PPE. It's no longer PPE. It's now what? Investment property. So you take it out from PPE and transfer it to investment property. Right. You can also have disposals. It's carrying amount. These are assets sold or scrapped. And we don't record them at selling price. We record them at carrying amount, which is cost minus accumulated depreciation on date of sale. Right. Then we now need our carrying amount at end of year. Which is our cost minus accumulated depreciation. At end of year. Right. So these are the things that you need to do the PPE. So as you do your calculations, you should structure them in such a way that they should give you the carrying amount at the beginning of the year, any additions, any revaluations, any impairments, any transfers, any disposals. They should be clear so that when you transport them to the PPE note, they are already there and clear from your calculations. So it will not take you time. But now, if you don't do that, you find that you might need at any stage to do a big calculation. Right. So our cost on 1 April for the manufacturing property, the manufacturing property were told that it had been acquired for 3.7. Right. So it was 3,700. The admin property. Right. Here I want you to be with me, my friends. The admin property construction started 1 June 2017 before this year. Remember, our beginning of year is 1 April 2018. Right. From 1 June 27, that is before this year, to 31 March 2018, only 2 million of the costs had been incurred. Remember, our year started on 1 April. So the other 3 million that is down here was only incurred during the current year. Any costs incurred during the current year are additions. So on our carrying amount at the beginning of the year, we only have these 2 million. By the beginning of the year, that that building had only incurred cost of 2 million. So that is 2 million here. Then we add. Our total will just be adding. Right. Then we'll have our accumulated depreciation at the beginning of year. Right. We know that at the beginning of the year, this manufacturing property had already been available for use. It was available for use on acquisition date. So that means from 1 April, it was available for use. Right. By the beginning of year, 1 April 2018, this manufacturing property had been available for 3 years exactly. 3 years exactly. From 1 April 2015 to 1 April 2018. Remember, we're pausing at the beginning of the year. Why? Because we need the carrying amount at the beginning of the year. That's why I'm first calculating up to the beginning of the year, so that we can have the carrying amount at the beginning of the year, which we'll need when we do our PPE. So first of all, we take a break, 1 April 2015 to 1 April 2018. Then the current year will be looked at separately. So from 1 April 2015, when we acquired, to 1 April 2018, the first day of the current year, there were 3 years. but we know that the depreciation is 25 years and the residual value of 500,000. So to calculate our depreciation, my friends, you would say the cost, which is 3.7 million, minus accumulated depreciation, which we are told that it's 500,000. I gave you this formula in the previous class. Right. Then we divide by 25 the useful life, but then we multiply by 3 because the building had been there for 3 years. I will repeat. 3.7 is the cost, minus 500,000 is the residual value. Then we divide by 25 the useful life of the asset. That will give us the depreciation for 1 year. But then we multiply it by 3 because by the beginning of the year, on 1 April 2018, the building had been available for use for 3 years. That's the reason of multiplying by 3. Right, so what do we get here?
$384.
384,000.
Yes, 384,000.
Right, but the admin property, it was 0. Why? Because the admin property was still under construction. You only start to provide for depreciation when the asset is available for use. And this admin property was only available for use on completion date. The building was available for use on completion date. And the completion date was 30 June 2018 during the current year. So by the beginning of the year, we had not yet started depreciating the admin building because it had not yet been ready for use. Any questions?
Eugene,
Yes.
is it possible that we can rather record it as a work in progress?
I can't hear you.
Is it possible that we can record it as a work in progress?
You mean that's why we recorded the cost?
Okay, I meant the heading, to have a heading of work in progress.
You mean work in progress? We don't have work in progress when we are recording buildings which are property, plant, and equipment.
Okay.
But if it was inventory, that's when we talk about work in progress. When you are constructing a building, all costs that you incur, as long as it's not yet finished, they will go to the building account, although it's not yet completed. So this amount here will be in the building account already. This 2 million, everything that you spent constructing that building, even before you have not yet finished, it will be debited in that building account. But normally, like if it's inventory, that's when we would first have to transfer it to a work in progress account. Then from work in progress, it goes to finished goods. Does that make sense?
Yes.
So for PPE, you debit the asset even before you finish. As long as you are constructing an asset, all costs for that asset should go direct to the asset. But you will not have started to depreciate it only. But the amount, all the cost will be debited to the asset account direct. But if these were buildings for sale, first of all, they would go to work in progress. Then from work in progress, they'll go to finished goods. Right. So we have so that will give us our. So here there's no depreciation on the other assets. So now we have our carrying amount at the beginning of the year. So this was the carrying amount at the beginning of the year. Then we have additions during the year. Now remember that during the year, we then did further construction work on the administrative building of 3 million. We now had 3 million of administrative work. So it will come here. We now have 3 million here on the administrative property. Right. Then we'll have depreciation for the year. Right. Our manufacturing property will still have 3.7 minus 500,000. Then divide by 25. But now we're now looking for a depreciation for 1 year. So there will be no, we will not have any multiply by 3 this time. But we're now looking at the depreciation for the current year. Then for the admin property now, for the current year, it now has to be depreciated. Why? Because by 30 June, it had now been ready for use. Right, so now say it had a residual value of 800,000 and a useful life of 30 years. So now say, now the total cost is 2 million plus 3 million, which is 5 million. So we would say 5 million minus 800,000. Then we divide by 30. But then remember, it was only available for use as from 30 June, and our year is ending on 31 March. So from 30 June to 31 March, that's 9 months. 30 June 2018 to our year end, 31 March 2019, that will be 9 months. So we have to multiply by 9 over 12. Remember that depreciation is always apportioned as long as the asset is available for use for less than a year. So multiply by 9 divided by 12. Right. Can I please get the two figures?
Eugene, for the admin,
Yes.
it is 105,000.
105,000.
Yes.
And the manufacturing property?
128,000.
Yeah.
Thank you, guys. Right. That's our depreciation for the year. Before I proceed, any questions on the depreciation for the year? All right. If we don't have any questions, then we get our.
Sorry, Eugene.
Yes, my boss.
Sorry to I just want to track back a little. This is just a curiosity question. I just want to know if, for example, I calculate the carrying amount, which is the 2 million, and do the current year's depreciation and whatever answer, I'm putting it aside. And then on the additions, I do a depreciation only on the amount of the additions and add those together. Wouldn't I get maybe, for example, that 105?
But the one thing that you should be careful, the 2 million, you should not even put the depreciation for the whole year. You will still get the same answer.
No,
as long as you are not taking this one as a full year. But it will only take 2 times.
Yeah. No, you're correct.
Because remember, it's not a question of maybe the 2 million is another building. It's still the same building, but it was under construction.
Yes.
But
Yes.
if in case it was a different building, then we're supposed to separate.
Okay, no, noted. Thank you, sir.
Thank you. And to Junior, if the asset was not yet ready for use, there was not going to be any depreciation on that asset. If they'd said by 2018, this admin building was not yet ready for use, we're not going to have depreciation. Depreciation will only begin when the asset is ready for use. Right. So that's it on the manufacturing and administrative property. Those are the calculations. Now we'll now go to the machinery. On 1 January 2015, which was about 3 or so years ago, Pump Limited purchased a machine Shako at a cost of 2,685 million. And on 1 April 2016, machine Swish at a cost of 6,260,143. Machine Shako and machine Swish were both available for use as intended by management, as well as brought into use on their respective acquisition dates. On their respective acquisition dates, management estimated the useful lives of machine Shako and machine Swish to be 5 years and 10 years respectively. And the residual value of new was allocated to both machines. Right, on 1 June 2018, Pump Limited exchanged machine Shako for machine Zelton. On exchange date, the fair values of machine Shako and machine Zelton were determined to be 1,250 and 1,850 respectively. So they now exchange. Machine Shako goes and they now buy one machine Zelton. Right. The fair values of both machines were reliably determined due to the existence of an active market for similar types of machinery. Machine Zelton was transported to the company at a cost of 35,850 and was installed and tested at an additional cost of 24,256. Right. A machine Zelton was available for use as intended by management, as well as brought into use on 30 June 2018. On this date, management estimated the useful life of machine Zelton to be 5 years, and the residual value of 200,500 was allocated to it. The useful lives and residual values of all these machinery remained unchanged throughout the period. Right. Then we've got so we have got 3 machines there. I'm going to deal with that, but let me also read the last paragraph, as it also has something to do with machines. Swimming pool pump division. On 1 March 2019, the directors decided to sell the swimming pool pump division because the division incurred losses over the past 2 years. On 31 March 2019, all the criteria to classify the swimming pool pump division as held for use sale, as stipulated in IFRS 5, non-current assets held for sale and discontinued operation was met. Management expects the sale to be concluded in a single transaction by 1 May 2019 for cash. The following assets are included in the swimming pool pump division. Why I read this is because the machine Swish is part of the pump division that they want to sell. Right. I'll jump this at the right. So they are saying that on 31 March, all criteria was met. Right. When they say all criteria, that means it's likely that the sale will not be reversed. They are definitely going to sell. Now, if you make a bold decision that you want to sell assets, those assets, they cease to be property, plant, and equipment. They will now be called non-current assets held for sale. So they have to be removed from property, plant, and equipment and transferred to non-current assets held for sale. So by 31 March 2019, we should remove machine Swish. It will no longer be property, plant, and equipment. It will be transferred, moved from property, plant, and equipment to non-current assets held for sale. So the moment that all criteria that you have made a commitment and all criteria for reclassification are met, you remove the asset from its category and transfer it to non-current assets held for sale. Fortunately, in this case, it happened on the very last day of the year, which is 31 March 2019. Right, so I want you to see the accounting, the calculations here. Right, I will now look at machinery. Right. Yeah, I want you to follow me again and make sure that you are with me. We have got 3 machines here that are involved. Machine Chako or Zako. We have machine Swish. We have machine Zelton. And we have our total. Right. We'll start with our cost on 1 April 2018. Right, machine Circle, the costs were given, it was 2,685,000. And Swish, it was 6,260,143. Right, so we'd say 2,685,000. We have 6,260,143. Machine Zelton was not yet there. Right. Remember that machine Zelton was only acquired on 1 June 2018. So that's why I didn't include it there at the beginning of the year. Because remember, here I was looking for them at 1 April 2018. It was not yet there. Now, let's remember that our machinery is depreciated over the useful life according to the straight line method. Here, depreciation is over the straight line over the estimated useful lives. Right, so that means my accumulated depreciation on 31 March 2018, which was before this year, or you can say 1 April 2018. For Swish, for Shako, sorry, it will be 2,685 divided by we're told that machine Shako and machine Swish estimated useful lives are 5 and 10 respectively. Residual value is nil, so it's 5 years. And remember, it was bought on 1 January 2015. So that means that by 31 March 2018, it had been there for exactly 3 years and 3 months. 3 years and 3 months. The whole of 2015, January. Remember, it was bought on 1 January. 2015, 2016, 2017, full 3 years. And then 3 months in 2018 up to 31 March 2018. So it was 3 years and 3 months. So you'd say divided by 5, multiply by, right. If they are years and months, the best way to calculate depreciation is to convert that period into months. 3 years is 36 months. 3 years is 36 months. 3 times 12. Then plus the 3 months, it becomes 39 months. So that will be the depreciation for the for machine Shako. Right. Then Swish, it will be 6,240,143. The useful life of Swish is 10 years. But it was bought on 1 April 2016. From 1 April 2016 to 31 March 2018, it was exactly 2 years. So by the beginning of the year, it had been there for exactly 2 years. 1 April 2016 to 31 March 2018 is 2 years. So I would say divided by 10 times 2 years. Right, what do we get as the two depreciations there?
For
1745.
1
1745. 745. 250.
right?
Yes.
1248029.
Right. So that will be our depreciation. Any questions there? Right. Then we get our carrying amount. On April 2018 at the beginning of the year. This was our carrying amount. Right. Then we now have additions. Right. Our addition. Remember, why am I talking about additions? Because we acquired machines.
Why are we using 624143 on our calculations, not 626?
0, isn't it? I think I didn't see properly there.
Oh, okay.
Yeah, it was just me. It was my fault here. Can you please correct this figure if it's wrong?
It's 125
125.
2029.
Thank you so much, my dear. All right, so that's fine now. The other totals will be fine because I used Excel there. Right. Then our additions. It's machine Zelton. Right. Also listen to me here very carefully. Right. Machine Zelton was acquired through an exchange with Machine Shark. And remember from our previous class, if you acquire an asset under a barter transaction, the cost of the asset is the fair value of the asset that we have given up if it's available. So our cost of machine Zelton will be the fair value of machine Shaku, not of Zelton. So when they exchange, on exchange date, the fair values of machine Shaku and machine Zelton were determined to be 1,250 and 1,850 respectively. So the cost of Zelton will be the fair value of Shaku which they used to pay. Your cost is what you used to pay. So when they bought Zelton, their cost was 1,250. And number two, all these additional costs incurred, transport, testing, are also added to the cost. Remember that any cost that you incur to ensure that your asset can be available for use are added to the cost of the asset. So our cost of Zelton would be 1,250 plus 35850 plus 24,256. So we're going to say 1,250,000 plus 35,850 plus 24,256. What do we get?
So one 1310 106. 106.
Right. Then we'll have our depreciation for the year. Right. Machine Shako, remember that it was only used up to 1 June when it was exchanged for Zelton. And our year started on 1 April. So we only used it for 2 months, April and May. We can't count June because it was only sold at the beginning. So we only used it for 2 months, April and May. Remember that our year started on 1 April 2018. So it was only used for 2 months. So the depreciation for Machine Shako would now be 2685 divided by 5 multiplied by 2 divided by 12. Right. Then the machine switch was used for the whole year until the end of the year when it was transferred to non-current assets held for sale. It was transferred to non-current held for sale on 31 March at the very end of the year. So it will have a full year's depreciation. So do you have 6260 143 divided by 10. Right. Then the last one now. Which is the Zelton, the new one, which we bought for 1310. We first have to check, does it have a residual value? Right, they said that it had a residual value of 200, 500. And its useful life was 5 years. And let's remember, it was only brought into use on 30 June 2018. It was available and brought into use on 30 June 2018. That is Machine Zelton. So we're going to say, let's follow each other here. So for Machine Zelton, it's going to be the cost that we calculated, 1310, 106, this one here. Then minus the residual value, which we're told here that it's 200,500. Yeah. Divided by the useful life of 5. So it'd say 200, 500. Then we divide by 5. Then we multiply by. Remember that it was only available for use on the 30 June 2018. So you should be very careful. Although it was acquired on 1 June, it was only available on 30 June. We only start to provide for depreciation when the asset is available for use. So it has only been available from 30 June until 31 March 2019, which is 9 months. 9 months from 30 June, we don't count June there because it was at the end. So we start from July to March, our end of year, which is 9 months. So we multiply by 9 over 12. Right. What about our depreciation?
For Machine Zako, it will be 87,600.
Which?
I got 89,500.
Got what?
89,500. I don't know.
I also got
I also got
that
89,500.
89,500.
Let's
So
recalculate.
maybe our friend made a mistake there. Just recompute. And this one is, I think it's 626 014.
014. Yes.
Then the last one.
166 441.
441. Like this.
Yes. Yeah. I stand to be corrected, but that's my calculation.
Not a problem. Let's see if there are any corrections.
Agreed.
Okay. That's sorted. Thank you so much. Right. Then we then have disposals. Right. A disposals are recorded carrying amount. Which is equal to cost minus accumulated depreciation. Right. So our disposal here would be a, that is, remember machine shackle was exchanged. So we can just say 939 750 minus 89 500. This one minus this one. Right. Which is equal to
850, 250.
right. We put it as a negative because we're removing it. Right. Then we have transfer to non-current assets held for sale. Right. NC stands for non-current assets. And this abbreviation is allowed even when you're in the exam. Right. So that means this should be transfer to non-current assets held for sale, should be a carrying amount. On date of transfer. So if you are transferring an asset on that date that you transfer, you have to remeasure it according to the standard that it was applicable to. Like in this case, it was PPE. So we first have to remeasure it according to PPE, which is the depreciating that we did here. And then we transfer it. So that will be equal to 5008 114 minus 626 014. We get right. Then we get our carrying amount at end of year. So you should be very careful with these calculations. It's very easy to make a mistake. So your debts are very particular, your residual values, your useful lives, they are very, very, you should be very careful there.
Eugene?
I think this one I made a mistake here.
Yes.
What about that? I made a mistake there on this one. Right, so this is our calculation on the machinery. Any questions?
Yes, sir.
Yes, my boss.
Oh, okay. I just want to be sure when the asset is disposed or when the asset is transferred, it's done, or that means you have to minus the carrying amount. In fact, you have to minus the depreciation from the carrying amount.
Yes, it's just like cost minus accumulated depreciation.
Yeah.
Mhm.
So meaning that for every transfer or a disposal of an amount, it has to be on a carrying
Carrying
amount.
amount. Yes.
Okay. I just wanted that clarity. Thank you.
Yes, my boss. Whenever you dispose an asset or transfer it, you should remove it at its carrying amount.
Okay. Thank you.
You don't even use the selling price.
All right.
Any other questions? Right. Now let me just give me a few minutes, guys. I ask for a few minutes to just do our PPE note. You see that it will not take us time. So now I want to do the PPE note. So I would say, so I would answer number A. The other parts I'll answer maybe in our next class. So I would say notes the financial statements of Pump Limited for the year ended 1 March 2019. Right. So we're going to have land, buildings, machinery, total. Right. In this question, they say don't show the total. So that means if you're in an exam or assessment, and if they say don't show the total, you don't show this column. Right. We'll have our carrying amount at the beginning of the year. So you find that if you have got your calculations, it will now be a free flow. Right. On our land, right, we know that it's made up of cost, accumulated depreciation. Right. Now follow me here. Our land, our cost at the beginning of the year, it was this one here. It was 3.5 at the beginning, the total of our, we combined them. There's now no separation of manufacturing property and admin building. So you will see that you just be picking your answers there, and that's it. So it was 3.5. That was the cost at the beginning of the year. Right. And our land does not have depreciation. So that's why it's 0 here. Right. Our buildings at the beginning of the year, our cost was, you then go to the buildings. Our cost at the beginning of the year was 5.7. So you now just be extracting. If you can see the my details there, just be checking my details so that you can see where I'm picking my answers. Right. Then our accumulated depreciation was 384. Accumulated at the beginning of the year. So that's it there. Then on our machinery, right, let me just. Our machinery, our cost at the beginning of the year, here it is. And our accumulated depreciation, we have it here. So you just be extracting from your calculations there. Any questions there? Right, then we have revaluation during here. Revaluation was only for the building. Remember that we then had a total revaluation of 500,000. That's the revaluation. When I highlight on the figure for you to understand it, go and check the description that is matching where I'm highlighting. That is the revaluation. Revaluation, remember, is only on the land. Right, additions. Remember, additions should always be at cost. There was no addition on the land. But on the building, remember, we had that admin building, we had additional cost of additions here of 3 million. We had additions of 3 million. Then on machinery, remember, we also had addition of machines Zelton. This addition of 1,310,000. We bought machines Zelton for 1,310,000. Right. Then we have depreciation for the year. There's no depreciation on land. On buildings, our depreciation for the year, we had 233,000. And on machinery, our depreciation for the year, we had this one, 881,955. So you see that if you have got your calculations and they are structured, you just be extracting. They will no longer. So that's why I say that the note will not take you time. Right. Then we have got disposals. During year. Remember that they sold machine Shako or Zako. Right. There was a sale. We had this disposal here. Right. Then we had the transfer to non-current assets held for sale. Remember, machine Swish was transferred to non-current assets held for sale. So you just picking from there. Then we can get our carrying amount at end of year. Which is made up of cost, accumulated depreciation. And if there is a revaluation, our land is no longer at cost. So we will now say cost of gross carrying amount. So we only include the gross carrying amount if there was a revaluation on our land, because we now have one asset which is no longer at cost. Right. Right. I think I put the wrong one. Our land, the value is now the new carrying amount of 4 million. Remember, it was 3.5, then they revalued it by 500,000. And there's no depreciation. Right, our buildings, I want you to be with me here. Remember, the cost was 5.7. Then they did additions of 3 million. So the cost, right, let me just say buildings. Right, to calculate your cost at end of year, you say cost at the beginning of year, what will be done in a very few minutes. Right, cost at end at beginning of year, which was 5.7. Right, add cost of additions, which was 3 million. Right, less cost of disposals, which is 0. We get a 8.7. So that's our formula for getting the cost at end of year. Right, then accumulated depreciation, end of year. We had cost accumulated depreciation, at the beginning of year. Right, which was right. We have 384,000. Right, add depreciation for the year, which is this, less accumulated depreciation on disposals and transfers, which is 0. There was no disposal or transfer on the buildings. So we get that's our accumulated depreciation. So we take that accumulated depreciation. Right, any questions there? Right, on the machinery, to make it easy, remember that machine Shaco was disposed, machine Swish was transferred. So we now only have machine Zelton. Machine Shaco was disposed, machine Swish was transferred to non-current assets held for sale. So we now only have machine Zelton, of which we can just take its cost, which is equal to 1,310, and its accumulated depreciation, which is 166. So if all the other assets are gone and they are left with one, the easier way is to just take the cost of that one and its accumulated depreciation. Because Shaco and Swish are no longer there. They are no longer part of our property, plant and equipment. Shaco is no longer in the company. Swish is no longer part of property, plant and equipment. It's now part of non-current assets held for sale. Right. Then if there was a revaluation of the building, then you can just say on 31 March, 2019, the land was revalued. Let's check if we know maybe who revalued and his qualifications. They said by an independent sworn appraiser. By an independent sworn appraiser. The carrying amount would have been 3.5 if no revaluation had taken place. Or if there's been a revaluation, you are supposed to state the qualifications of the person who did the revaluation. And you state the carrying amount if no revaluation had taken place. That is the original cost. So this is how we do the property, plant and equipment. Any questions? Right, I know you're tired. If you are not, please guys, before our next class, make sure that you review the work so that when we meet, we can be able to have our questions first before we move on to the next part. Thank you so much. God bless you richly and enjoy your evening.
Before you leave, sir,
Yes,
this class was recorded, right? Because I joined
all
in late.
classes are recorded.
Thank you,
All
sir.
classes. All my classes will be recorded and they will be sent either later today or latest by tomorrow morning.
Thank you.
Thank you, my boss.
Thank you.
Thank you, guys. Have a pleasant night.
Thank you so much. Bye.
Thank you.